Hi, my name's Joe Achaturo. I'm a certified public accountant, and I'm going to teach you everything you need to know about doing your own taxes. So let's get started. Hey, welcome. This is going to be a quick little tutorial on deductions versus tax credits. And I'm going to show you which one is the most valuable to you. First, we need to take a look at the tax formula. Okay, what is the U.S. tax formula? I forgot again to put it in presentation mode. Let's take a look at the tax formula. First, we're going to take our taxable income. We're going to subtract out adjustments. That's going to get us to our adjusted gross income. Step two, we're going to take our adjusted gross income, subtract out deductions. I'm simplifying. There are some other steps in the middle that don't really apply, and for the sake of simplicity, I cut those steps out, right? So basically this is how your taxes are calculated. So we take our adjusted gross income from here, then we subtract our deductions. That gives us our taxable income. Now it's going to be our taxable income before tax credits. Okay, so we're going to take our taxable income, we're going to multiply our taxable income by our tax rate, right? The percentage that the government is going to tax our income on. In the U.S., we do a graduated tax rate. So the more you make, the more each section of income that you make over a certain amount gets taxed. We're not going to talk about that. I'm going to keep it simple. All right, I'm going to use a flat 20% tax rate for this particular slide. So just to keep it easy, we're going to take our taxable income, we're going to multiply it by our tax rate. That's going to give us our tax due before tax credits. Last, go away. Last, we're going to have our tax. Oh, that's annoying. Right, so we're going to take our tax before tax credits. We're going to subtract our tax credits, and we're going to end up with a tax due after tax credits. Okay, so we're going to show you what that looks like when we use some real numbers, right? So we're going to take $100,000 of taxable income. For this example, what I'm going to do is I'm going to take adjustments to that income. So the adjustments I'm going to take are going to be, let's pretend it's a teacher. We're going to take a $250 adjustment. That's going to knock our adjusted gross income down to $99,750. We're going to take that $99,750. We're going to go on to step two. For most people, is going to be a deduction. So we're going to take the standard deduction in this case for a single individual. So we're going to take the $99,750, subtract $12,000. It's going to give us $87,750 of taxable income. Okay, we're going to take that $87,750 of taxable income. We're going to multiply it by our fictitious tax rate of 20% to get us taxes due before credits. Right, so it's going to be that would be our normal tax bill, $17,550 before tax credits. So before tax credits, if there was no tax credits that we had available to us, that would be the amount we would owe. Okay, so we're going to take the set $17,550 of taxes before credits, and then we're going to apply our tax credits. Our tax credits in this case are going to be $2,000. Let's pretend we have one child. Although I'm going to completely screw everyone up because that would change a lot of other stuff. But for the sake of simplicity, I'm just showing you how the formula works. Forget about what the actual numbers are. So we're going to take the $17,550, subtract the $2,000, and then the actual amount we're going to owe is going to be the $15,550. So let's take that to the next step and show you why a $2,000 tax credit is worth more than a $2,000 tax deduction. So here I put together some formulas, right? This is going to be $100,000 of taxable income with the $2,000 deduction. That gets us down to $98,000. That $98,000 is going to be taxed at a 20% tax rate, and then our tax due is going to be $19,600. We'll take that same $100,000, and if we had no deductions available, we're going to end up getting taxed on the full $100,000. Now, when we get taxed at the full 100,000 at the same tax rate, our tax due is going to be 20,000. So what's the difference, right? What's the difference between this number and that number? That's how we value what a tax deduction is worth. So we're going to take the change in the tax due when there's a deduction and when there's not the deduction. And what's that difference? 20,000 minus 19,600, 400. You'll also see that the difference, that 400, is the exact same number as the deduction multiplied by the tax rate. Okay, so if this tax rate was 10%, that deduction would only be worth half, right? It would only be worth the difference would only be $200. Now, moving on. Tax credit. Now we're on to the $2,000 tax credit. Let's take we're going to use the same numbers from the tax due, because remember the formula, right? It's the taxable income less the deductions equals the income we're going to get taxed on. So we're going to take the income we're going to get taxed on, multiply that by the tax rate. That's going to give us our tax due initially before credits. After credits, which is why I did it separately, is going to be the bottom half of the formula, right? So let's see what's worth more. We're going to take that 19,600. We're going to subtract out the $2,000 in tax credits. That's going to give us a $17,600 tax due after tax credits. So let's take a look what that means. That means our net change in the taxes due, the final tax due after the tax credits, are going to be $2,000. Right? So that $2,000 tax credit is actually going to be worth $2,000. And you see that below. Right? You see how I put this below. The $2,000 tax credit is worth $2,000 to our pocketbooks. Same thing over here, right? If we did the same formula, we take the $20,000 tax due, subtract out the $2,000 tax credit. That gives us $18,000 of tax due after tax credits. So what's the change? The change is going to be the $20,000 minus the $18,000. So our $2,000 tax credit is worth $2,000 to our pocketbooks. As we go down below, to sum up everything, you'll see that the $2,000 credit is worth $2,000. The $2,000 deduction is worth $2,000 times whatever that tax rate is. So that it's a net savings of $400 to our pocketbooks. Now you can see why a credit is worth more than a deduction. Generally. Again, there's always exceptions, but generally. That's how the math formula works. And now you know. So when people talk about credits versus deductions, you have an idea of what they're talking about, and you know which one is more valuable to you. Thanks for watching the video. I hope you learned something. Please click the subscribe buttons below. And in addition, there are links taking you to the tax software that we use for most of these tutorials. When you click on the link and you use this tax software, we get credit. When we get credit, we can keep providing you with these free tutorials. So again, if you found these videos helpful, please click on the links, help support us. And in addition, if you were to join myfreecpa.com, you could get these videos without any commercial interruptions, which would help everything move along faster. And you can actually save the videos so that they're there for you year to year as your situations either remain the same or change. And it's just a one solid place for you to find exactly what you need to help you prepare your tax returns every year. So once again, thank you and have a great day. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a do your own taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper, right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.